Down begins for the markets with meticulous research and analysis designed to help you capitalize on the trading day. Beaming live from the CNBC-TV18 Motilal Oswal studio.
Good morning, hello and welcome to Bazaar Morning Call. We are coming to you as always from the CNBC-TV18 Motilal Oswal studios. There's a lot to talk. There are more tariff headlines that have come through, but markets, let's see if they can remain as unfazed as they have throughout the course of the last couple of days. I'm Surbhi Upadhyay. With me as always, Nigel D'Souza. And in a minute, we'll have Prashant joining in as well. Morning, Nigel.
Well, morning, Surbhi. It's a Friday, always a good day, right? And I think though the headline is that the markets could open a little bit lower, maybe by the end of today, it will not be so bad. So let's see how it goes.
Okay, so let's take stock of what, we've got on the screen. And it's typical Trump style because India time, you go to bed at around, 12 o'clock. I was awake till 12. Okay. And the world was a calm place. It was fairly steady.
Typically, you go to sleep at 10:30, 11, but it's okay.
But it's okay. But that's what I'm saying. Even between 12 o'clock and morning 5:30, so much can change, right? News flow is so hectic that we've woken up this morning to fresh news on tariffs. So, two separate tariff headlines. One is this number on Canada that he is speaking about. Now talking about 35% tariffs on Canada. And then there is another range that he's given that most tariffs on most other countries, he's saying, will be between 15 to 20%. Remember, as of now, whichever countries have not got these so-called letters, they're at baseline 10%. So the directional move on tariffs seems to be higher. Let's actually look at how markets have reacted to this. So the first reaction that's coming in, if you look at Asian markets, it's all right. Look at the Hong Kong market, for instance, it's marching along. And Hong Kong is not the only one. If I look at other regional markets as well, whether it's Singapore or whether it's Nikkei, there's no major slide across any of the markets. In fact, there's more green than red across Asia. Japan is absolutely flat, around the flat line. The mainland China market, the Shanghai market, is also up about 0.6%. There is, however, a reaction in the US futures. US markets last night ended in consolidation, but the bias was positive. You had the Nasdaq, the S&P 500, the Dow largely higher. But now if you look at the futures, they're down about 0.5%. So there is that sense of caution that's coming in. In fact, from 0.5% of a decline, now it's about 0.4%, 0.3%, depending on which index you're looking at. The dollar moved slightly higher, but that's not only after this tariff announcement. Anyway, the dollar was well bid last night in US trading action. So the dollar index is now creeping back to the 98 handle. That's what we have on the screen. So the short point is the markets continue to be largely unfazed. The tariff announcements are coming, they're going, and maybe that is why. That's why I chose to put up that part of, Mr. Trump's tweet, where he's again giving, a window of negotiation, so to speak. He's saying if Canada works with me to stop the flow of fentanyl, we will perhaps consider an adjustment to this letter. So that's, and maybe that's why markets are not too perturbed. Just a quick final point on U.S. action. The rhetoric, between Jerome Powell and the White House just refuses to die down. And now we have a fresh salvo being fired. The White House is accusing the Fed chair of mismanaging the Federal Reserve. Specifically, there's a comment that's coming from Russell Vought, who is in charge of the Office of Management and Budget. And he's saying that Powell has been misleading the U.S. Congress about how much they're spending on the renovation of the Federal Reserve building itself. So politics around that is at another level. But anyway, just putting that on the table for reference. I'll come to the India cues in just a bit, which are extremely important. But Prashant is also joining in. Good morning, Prashant. Lots of tariff headlines for the market today.
Good morning, Nigel. Morning. I was stuck behind a bus. And, there was nowhere to go ahead.
Sounds like the market, stuck behind a bus.
I was going to come to that. It's exact perfect kind of, right?
Perfect phrase for the market,
yeah. I think you summarized it very well in terms of some of the stuff which is happening. I'll just take 1 minute to really, say what is the new thing, because Mr. Trump, the president, speaks every day, every night, every morning. So this is the new stuff, right? So Trump tariff comments early this morning in focus. By the way, there is a market reaction. S&P futures were actually flat. They are down. And you also have the dollar, which has perked up a little bit more. So those are the two clear reactions. The Canadian dollar, for example, has come off a little bit, but it's not a disaster. So Trump is said to, he's saying he's going to impose 35% tariffs on goods from Canada effective the 1st of August. 35%, but he's saying, well, we're going to negotiate. We'll see if it's higher than this, lower than this. So that kind of leaves room for, nobody's going to put pen to paper and say, well, 35% impact on Canadian exports. Not as yet, because no one knows whether this will go through or not. But 35% is much higher because the number was 25% earlier in terms of what markets were penciling in. There was also a 21st July deadline for US-Canada. So this is suddenly, thrown out of the window. Trump, of course, he's saying that he's also going to impose blanket 15 to 20% tariffs across the board. Where does that come from? I mean, is that number was 10%. Now he's saying 15, 20%. But again, I mean, if the market were to take that seriously, you would have a serious risk-off across the board. But that's not the case. And I think that's quite symptomatic of the way the market is treating a lot of the commentary which is coming through. He's also said that EU and Canada, etc., will get tariff letters today. That is tonight, our time, US morning. And there's a major statement on Russia, which is coming up on Monday. So a fair bit. As I said, US equity futures reacted to this down. Dollar index perked up last night. I mean, I think in that sense, because all this has happened this morning in terms of commentary, the action kind of takes a bit of a backseat. It's not as if very much happened. The S&P was up about 0.25%. The dollar index, nothing. The 10-year also, absolutely nothing. Both were flat. The only other indicator was oil, which fell about just under 2%. We're back at about just under $69 a barrel on Brent oil prices. You also had weekly jobless claims, which kind of did not tell us this or that, indicated stable labor market conditions. But just this comment, right? Governor Waller of the Fed said, well, he basically said that I'm out of sync with the consensus at FOMC. And he said, I argued we cut in July. That's my view. I'm clearly in the minority, but it's not political. So there are those who are kind of saying that we should cut. We should kind of look through all the tariff pain and inflation, perhaps, which will be caused by these tariffs. The levels here, yesterday the markets, of course, ended lower. So we've had to look at the 20-day moving average, which now comes into reckoning, comes into view. So the support for the Nifty at 25,244, which is the 20-day moving average. And, hopefully from this, the 20-day is always an important near-term indicator, a turning point. Hopefully, we make a turn from here, from about 25,244, from close to that. 25,669 is the resistance there. For the Bank Nifty, again, 20-day comes in at 56,630, and the resistance comes in at 57,363. So just some slight tweaking with the market, with what it did yesterday, where it's, indicative start about 135 points. I think, names like TCS and perhaps the larger IT space is one reason why that pressure perhaps is going to come through. But, Surabhi, it was not just TCS. You had lots of news flow. You had Glenmark, you had TCS, and of course you had HUL as well.
No, absolutely. So coming to that, so the short point is that the tariff headline is not the biggest headline for the market this morning. And markets across Asia are simply taking it in their stride. But the reason we need to be, a lot focused on local news flow is because of the kind of company-specific inputs that we've got. Before I get to that, just very quickly on the fund flows, FIIs were buyers to a very small extent, 220 crores of net buying. Domestic institutions were also buyers, about 600 crores of net buying coming in. So far this week, the Nifty is down just under 0.5%. The mid-cap index is down almost 1%. And again, the small-cap index is down 0.4%. For me, the biggest question today is how much of TCS's disappointment is already in the price. There's no two ways about it. TCS was worse than what was anticipated. But, if you look at the IT index, it's already down 2% this week. TCS itself has fallen 1% this week, has fallen 2% so far in July. Now, why am I saying it's worse than expected? We were going with an expectation of 1.4% constant currency revenue decline. What has happened is a 3.3% constant currency revenue decline. Not just that, the management commentary, there is delay in decision-making. Clients are deferring deals. That's continued into Q1. They are not yet sure about wage hikes. They've not made a decision on wage hikes. But they're saying there's a lot of pent-up demand. So once the macro issues and uncertainties around tariff clear, TCS says it's confident of getting more business back and getting the growth back on track. So watch for TCS. Glenmark is a big news. And remember, yesterday, the Glenmark stock was up 5%. It's a major, major R&D breakthrough for the company. They are out-licensing an under-development drug, which is called ISB 2001, to AbbVie. They're going to be getting $700 million upfront. And then they could potentially get over $1 billion in milestone payments if this drug continues to do well during the course of development. And keep an eye out on Z as well, because the promoters were looking to get shareholder approval to get those warrants, which could be converted to equity. It could lead to their shareholding going up. Guess what? Shareholders have voted thumbs down, not in favor of it. So another stock that's in news. So Nigel, my sense is it's going to be local company-specific news flow that'll keep us really busy today.
Well, that's right. Yesterday, we ended with a cut of around 120 points. And today, we're going to follow that up with a 140-point gap down, going by what the GIFT 50 is suggesting. My gut is today, we recover from the day's low and probably we end the day closer to around the flat line or maybe in the green. That's the gut feeling going by the kind of price action. The reason I say that is we ended lower yesterday. The India VIX remains at very, very subdued levels. And that's a positive indicator, actually, when the Nifty ends low as well as the VIX cools off. Well, moving to what the FIs did in yesterday's trading session. Interesting times, right? In yesterday's trade, they added some mild short positions, both on index futures as well as on stock futures, while they unbound some long positions. You know, you wanted some shorts in the system. You have got that wish. Now you have 75% of their positions on the short side. And if you look at it in absolute terms as well, at the start of the series, we were saying the FIs are mildly net short. Now that number is moving towards that golden mark, which is around 100,000 short contracts from the FIs itself. So just take a look at that. The FI positioning, close to around 85,000 contracts. Well, this perfectly tells you the picture. While you have the clients, they are net long. Just take a look at their long positions. It's moved to around 55,000 contracts. This combination is something I normally like. So I think there are some shorts in the system. We open gap down. There is a probability that we see some kind of recovery, provided we, protect the first hour lows. Moving to the options data then, since we're not getting any big move, it appears there's a short straddle at play. What is that? You write the same strike, call as well as put, and you pocket the premium, which in this case is close to around 300 rupees or thereabouts. So from the 25,400 odd mark, you add 300 points and you deduct 300 points. And that's giving you a broad range. On the downside, the 25,100 will be important. On the upside, 25,700 or thereabouts. So that's the broad range. For the day, this 20-day MA, by the time we wind up today, I want to see the Nifty, protect this level. So this is the line in the sand for the day. By the end of today, you want to end about that. Otherwise, we're pretty much in this range. On the upside, the Nifty has not been able to make higher highs. So I'd like it to get past this 25,524. It's a little bit distance away, going by the fact that we're going to be starting off in the red. But I'll keep an eye out on that mark. Stocks that I'm looking at, well, Glenmark, as you all mentioned, it's a major global licensing deal. However, the stock is up close to around 18% just in the last 1 month. From the recent close, it's seen a big rally. The other factors, this open interest built-up has been massive. So there's big long addition out there. And also delivery-based buying has been seen ahead of this event. The short point is the street was sniffing something that's come about. So maybe chasing today's gap up, which could be as much as 10%, may not be such a wise decision just for today's trade. It's a positive, but maybe in the near term, some part of that is already factored in because monetization will take time. And finally, HLL, there's a change at the helm. The street is quite optimistic about that. And institutional holding in the stock actually is relatively lower in comparison to the benchmark itself. So the street really believes it's going to be good. Expect a bit of a pop-up and then we'll wait for delivery on that front. But as I said earlier, tinge of green I'm wearing today. The market's opening up in the red. Let's see whether or not we see a bit of recovery out there.
All right, tinge of green and running shoes. I don't think...
don't get me into trouble, Prashant. Don't get me into trouble.
I don't think our viewers can see that. So just in case it doesn't pan out, run.
Jordan's.
Okay. Run towards the green side. Maybe,
Okay, well, we have Florian Netto, Head of Investments Asia at Amundi, now joining us to take us through some of the stuff that he's watching out for. Florian, great to have you with us here and back on the program. Thank you very much for your time. Prashant, this side. Just a quick word, Florian, on... the way markets are set up. I mean, it's just this constant barrage of news flow. You can ignore it. It's a lot of noise, but it does kind of make you a little hesitant, right? Because you just don't know. So in that sense, it's uncertain. What's your view? Will H2 be a little tougher? Or actually it'll be a period where markets will now look through all of this tariff and trade noise?
Yes, thanks for having me. You're right. Uncertainty is rising again with the tariff headline. The main thing we try to keep in mind is we try to summarize a bit what's happening on the tariff just for us to take a more informed decision. One, we will have more pressure coming from the US to have a deal, and the ultimate deadline is on the 1st of August. Okay. Second point, we may have tariffs that are actually having an effective rate higher than what we were initially thinking of and economists are thinking of. So we have to work back on the modeling when the dust will be settled down, to work on the expectation of growth and potentially market reaction. The third point that is quite important for us in Asia is that you have more and more, and the commonality so far in the deals we have seen is that you have more and more measures sidelining China with transshipment features. So on this one, could be very interesting to see if it's as well happening in other US and other Asian economies deal in the coming days. But it will be very hard for some smaller economy in Southeast Asia to choose between your largest investor and your largest exporting market. So without digging into the potential methodology, when you talk about transshipment, for example, does it mean that supply chain diversification will be part of it? Meaning 80% of your product is manufactured in China, 20% left is manufactured in Vietnam. Is it a transshipment? Is this the supply chain? So all this is still up in the air, but when you look into the details, Vietnam export can go from 1.7 to 20% of Vietnam export to the US, depending on the methodology. So a lot of things is up in the air. If we take a step back now and we look into the markets, we do believe that growth is going down for the US slightly, so a moderate deceleration, and same in Europe, for example. So in developed economies, we do believe we will end up with a below potential growth, but it's not the case in Asia, for example. So we have been upgrading some countries in the region. Typically, India has been upgrading for us last month, and we have a wider premium between growth in EM and growth in DM economy going forward. When you look at inflation, we are quite comfortable. We have this inflation that is confirmed in Asia. We have as well the impact of the tariff has been quite deflationary. So far in the US, we are not seeing a lot of impact on CPI. It may eventually happen, but we are not very concerned about inflation. And central banks are cutting rates. So for us, when we sum up for H2, we do believe that we will keep our moderately risk on asset allocation. Then we look back and we see that we have been making a lot of money already in year to date. Some markets have been performing significantly. So we do believe you should have a risk on positioning. We prefer equity at this stage, but we increased hedging. And we are reducing risk a bit in credit because we do believe that risk return is less favorable today with the tightening of the spread we've seen so far. And we know that the terminal rates will still be a bit volatile going forward. So it can very much wipe out a bit the gains you are making on the credits. So if we have to choose, we prefer equity. We remain risk on. We are reducing high yield, increasing more capital stable type of credit issuer in our portfolio, and we see how it goes. We are not fighting the momentum. The market is looking through it, so we keep on running with the market.
Okay, so you're with the market. The market is looking through all the tariff noise, and you explained the rationale, Florian. You also said that you're upgrading some markets in Asia. Yep. Which markets are those? Because we here in India are still not getting that big flow of foreign money. What's your sense?
Yeah, no, indeed. We did two tactical opportunities in June. We added to South Korea equity. It will not be very surprising to you, but we have a unified government now in South Korea. They will bring a large supplementary fiscal package. They announced more than 30 trillion Korean won. But more importantly for us, they have been committing to do more pro-equity market measures. So they will do some amendments of Commercial Act. When you look at the positioning in Korea, this is very light. Yes, money has been flowing in over the last 6 weeks. But if we sum up, we had $2.5 billion foreign investor coming to the market only. And if you look at year to date, it's still a very big outflows out of Korea. So cheap valuation in aggregate. We are very happy to turn very max overweight on Korea. We did it in June. It has been performing very well. What we try to do now is to be careful on some momentum stocks. We are not chasing the banks there. And we are trying to favor the old co, especially the ones that have a strong underlying business growth and tech memory plays. So Korea is one. The second one is Hong Kong quoted stocks, both China offshore and Hong Kong stock. We may come back to that, but we have big southbound flows. It's a year-to-date record high for southbound flows. Chinese mainland investors are investing in Hong Kong. IPOs is running very high. Hong Kong is at the top of the board. It did not happen over the last 4 years. And we have Hong Kong monetary authorities that is trying to fight against abundant liquidity we are seeing in the market. So we are quite positively oriented on Hong Kong quoted stocks as well.
All right, Florian, a short conversation today. Thank you very much for joining us. Appreciate it. We're going to take a quick commercial break here. We're going to come back with more stock-specific action because it's all about stocks today, as we were talking about. HUL, Glenmark, Z, Anand Rathi, AG's Wopac, which was a recent listing, AG's Logistics, and Viro Infra Engineers, which was, of course, on the move yesterday as well. These are stocks on the back of positive news flow. There's TCS with that constant currency 3% decline, IREDA, Tata Lexi, which are stocks on the radar, which are likely to open in the red on the back of negative news flow. Stay tuned, coming up.
Welcome back. Well, let's focus on the top stocks that we're tracking for today's trading session. Let's start off with Rima, who's joining in to tell us a little bit about TCS numbers. Well, Rima, numbers were disappointing. No two ways about it.
No, absolutely. Especially on the top line, the company's revenues declined by 3.3%, much worse than the 1.5% that the street was anticipating. There are two reasons for that. One, the BSNL ramp down on expected lines, but the BSNL ramp down impacted their revenues negatively by 2.8%. But where it missed even the management's own expectation was the business X of BSNL. BSNL ramp down was known, but the international market revenues also declined by nearly 0.5%. And the management in the press conference spoke about the trend in delays in decision making by clients, the deferments of clients. They spoke about it even in the prior quarter, but that continued even in Q1. Given the uncertain environment. And you can see that impact in both TCS and Wipro in the ADR and the way they closed overnight on Wall Street. The positives in the numbers were margins were steady, 24.5% in line. Deal wins also fine, $9.4 billion. And the management still holds out hope. They are saying that international market growth in FY26 will still be better than FY25. But I think for the day, given the miss on the top line, weak start to the year, the stock will open in the red.
Oh, yes, absolutely. That's the question. How much has the market factored in? And how much worse can the stock reactions be? You'll hear from the entire TCS top brass in just a bit from now, starting at 8:35 a.m. Okay, let's move to the other big headline and the big stock of the day. And it's Glenmark. Remember, Ekta was alerting us on this yesterday that there could be something on this new cancer drug. Ekta, what a moment. I mean, Glenmark potentially getting billions of dollars on this new drug?
Well, yes, and getting $700 million upfront already. So, yes, it's a landmark deal, really, which has taken place for Glenmark. And, when I was talking to Glenn yesterday, he said that it's 25 years in the making. That's what goes into R&D in terms of the kind of patience that you need for R&D. So, in this particular deal, the molecule is under development. It's under phase 1B. This particular molecule with Glenmark, ISB 2001, is now out-licensed for AbbVie to study it further for multiple myeloma. So what takes place is that Glenmark is going to be getting $700 million, after which AbbVie, if it does hit these certain milestones, will be paying Glenmark as much as $1.2 billion in terms of milestones, if in case they are hit. After that, if in case this particular molecule does hit the market, it is successful, goes through all the phases and maybe sees a commercial launch in 4 to 5 years, that's generally the time frame, then Glenmark will also be eligible for tiered royalty sales. So that means that it could be a multi-year opportunity for Glenmark. Nonetheless, now in terms of the $700 million, they said that they will be using it for R&D on IGI. Separately, they will keep some cash on books, and they will also they'll also pay a dividend to Glenmark. Separately, they might even look to reward shareholders. Overall, a deal which is above expectations, according to analysts as well, because they were assuming around $300-400 million in terms of milestone payments, and a deal value or a drug value of around $700 to $800 million. Both these factors are above estimates, and hence maybe there could be further upside on the stock.
All right, Ekta, thanks a lot for explaining that to us. In fact, we'll bring you an exclusive chat with the management of Glenmark Pharma on this landmark deal at around 9:40 a.m. That said, there's a rejig at the top. Mangalam joins us to tell us about HUL. Mangalam, I like the way Nomura put it. New court, new management, new players. But the stock moves up today, right?
Let's talk about, new sentiment as well. The last 2 years have been the most tumultuous for Indian consumer sector. And now as things are turning, there has been a leadership change at HUL itself. The big news is Rohit Java stepped down within just 2 years of appointment. So which is, very rare for a company like HUL, where you haven't had many leaders step down in that little time. He says that he is going to pursue the next chapter in his personal and professional journey. And in place of him, Priya Nair, who's currently the ED of Beauty and Wellbeing globally in Unilever, has been appointed as CEO and MD with effect from 1st August 2025. And she joined HUL in 1995, has been there, done that, with digitization, premiumization and purpose-led brand building, things that HUL's next leg of focus is on as well. And she's also the first woman CEO of HUL, about time, because a lot of women leaders from HUL are CEOs of other companies as well. But the important part is the last 5 years, HUL's share has returned just 8%. The previous 5 years, it was 3.5 times higher. So from here on, with sentiment turning, are the good days for HUL ahead? We'll watch out for that. Management changes usually imply that. Recovery in volume growth is something we'll be watching out for. What she does with premiumization in the beauty sector is something that we'll be watching out for as well. And I'll personally be keeping an eye out on what the company does in foods too, post the demerger of the ice cream business. Because remember, Horlicks has not grown as much as the company wanted it to.
Okay, indeed. Big moment there. Women leadership right on top at HUL, and more women leading the consumer juggernaut in India. There's Prabha Narasimhan, and now we have, of course, leadership coming in from HUL as well. In fact, we'll discuss this with Abneesh Roy. What are the implications for the company as this leadership change gets underway? We'll discuss this at around 9 o'clock. Let's move on now. Vamakshi is joining in with news on Z Entertainment. Vamakshi, morning. So promoters may not find it easy to increase their stake in the company?
Well, absolutely, Surbi, that's right. There was a special resolution that we highlighted a couple of days ago that the shareholders were to vote on to approve the issuance of convertible warrants to the promoters, but it has failed to get the requisite number of votes. Now, keep in mind that around 59.5% shareholders voted in favor of this special resolutions, while 40.5% voted against this. But keep in mind, for a special resolution to actually go through, a minimum of around 75% votes should be in favor of the resolution. But this is not the case. It's not a simple majority, and therefore the promoters' aspiration to increase their stake could be put on hold. Now, keep in mind that earlier 3 proxy firms, which is IIAS, SES, as well as InGovern, recommended voting no on issue of the warrants, and some of the key objections revolved around the rationale behind the fundraise, given that the company had almost 2,410 crore cash on the books, the choice of the financial instrument as well, because it would lead to nearly 15% dilution for the non-promoter shareholders. So therefore, not a great news for Z Entertainment going with the red for this counter.
Okay, all right, Vamakshi, thank you very much for that. So more on this as markets open. IREDA is the next one, which is in focus. Gaurav has got details. Gaurav, morning.
Well, yes, IREDA, when we talk about this company, we have already seen that loan book growth was strong, but what actually came as a negative surprise in this quarterly result was the profitability, because it has declined, and there is a reason that the asset quality has deteriorated a little bit. So let's understand the numbers first. Net interest income increased almost by 38% on a year-on-year basis. PPOP, which is operating profit, grew almost by 49%, but there was a weakness in profitability, and that was because the gross NPA that has gone up almost to 4.1% now, and this is because of the 2 major factors. First is that there was the Gensol account in the tune of around 730 crore rupees. Now, this was actually known to the market, but what was unknown is that one borrower was shifted from stage 2 asset to NPA, and this account was worth 780 crore rupees. That actually factored in the gross NPA figure, and that is the reason when we look at provisions also, that has gone up, and as a result, profitability has come down. Let's also not forget that the stage 3 assets have also increased almost in the tune of 76% on a sequential basis. So that is also something that we will be watching out for. When it comes to net interest margins, there also we have seen a calculated figure actually falling in a tune of 30 to 40 basis points on a sequential basis. So definitely a weakness is what we have seen in profitability, margins and asset quality. And on back of this, we are watching on a radar today.
Absolutely, and we'll not just keep it on our radar. We're going to quiz the management about this. Why this weakness in asset quality? Why has the revenue fallen? We'll chat up with Mr. Pradeep Kumar Das at around 9:30 a.m. Thank you for that, Gaurav. So, IRDA definitely on our radar. Let's go back to more IT earnings. Tata Lexi also reported. Rima, morning. How are the numbers?
Very weak. So the company's top line has declined by 3.9% quarter on quarter. Year on year, it's a drop of 9%, and all the three verticals that they're present in hasn't grown. Transportation was flat, but a sharp drop in media and healthcare. The decline in the revenue put pressure on margins. So margins dropped by 200 basis points sequentially. Profits were down about 16%. That said, the management does say that both transport and media will come back to growth in Q2, and therefore they expect a steady improvement in the bottom line and margin as the year progresses. So weak Q1, but the management is hopeful of things improving as the year progresses.
Okay, all right, Rima, thanks so much for that. Well, let's go across to Vamakshi. She's here to tell us about Anand Rathi. Vamakshi?
Well, Nigel, a good set coming in from Anand Rathi this time around. Historically, when we look at the Q1 trends as well, they indicate that Q1 is a very strong quarter, and it continues to be the same for Anand Rathi. Keep in mind that their total revenue from operations grew by almost 23% quarter on quarter. Double-digit revenue growth is what the company has reported this time around, and this is largely being led by distribution of financial products, which saw an uptick of almost 36% quarter on quarter. Now, other than that, when we look at the company's operational efficiencies, that increased because the cost to income ratio fell by almost 571 basis points. The employee expenses as a percentage of revenue too saw a dip. So there is more efficiency coming in, and this can be evidenced by the operational trends that the company has posted. Apart from that, when you look at the net profit, that saw a very strong growth of almost 28% quarter on quarter, largely driven by the operational efficiencies. Let's look at the AUM then. AUM stood at 1 lakh crore. This they managed to achieve almost 88% of it. They believe that they are on track to achieve the guidance. Overall, a good set coming in from Anand Rathi. We'll be waiting for the comments from the management.
Okay, all right. Vamakshi, thank you very much for that. Vinny now with more stocks in news. Vinny, morning.
Good morning. So keeping an eye out on Aegis Vopak as well as Aegis Logistics. Now, Aegis Logistics had actually transferred an LPG terminal to Aegis Vopak. This is at a cash transaction of 480 rupees. Obviously, it's a related party transaction, but it's at an arm's length price, so no worry on that front. Now, this is mainly a static storage capacity, 48,000 metric tons. This was commissioned on July 3rd itself, so it's not yet come into the numbers for Aegis Logistics. So again, there's no adjustment that will be made on that front, but positive for Aegis Vopak. Other than that, Enviro Infra Engineering, that's the one we're keeping an eye out on. We're expecting green coming in here. The company has actually forayed into ZLD space, and they have entered into a contract, an order of around 400 crore is what they've won. This order will actually help them enter the advanced wastewater treatment technology, which is involving ultrafiltration, MVR as well as RO. And do not forget, this will help them further expand in Maharashtra as well. Yesterday also, just a couple of days back, actually 9th of July, there was another 395 crore deal as well. So a couple of deals coming in for the company in the last few days. So green expected here.
Okay, all right, got it. Thanks for that, Vinny. Let's quickly recap our list of stocks to watch. The ones that have positive news flow this morning are Glenmark Pharma, HUL, Z Entertainment, Anand Rathi, Aegis Vopak, Aegis Logistics, and Enviro Infra Engineers. Stocks with negative news flow, of course, TCS, IRDA, and Tata Lexi, all on the back of numbers. We'll take a quick break on that note. Coming up on the other side, the conversation with the TCS management on Q1, and more importantly, the Qs ahead for the rest of the year.
Welcome back. The big story, of course, this morning is going to be the TCS numbers and what it means for the rest of the IT space. Rima and I caught up with the top TCS management to talk to them about the first quarter performance. First up, we will listen into the company's managing director and CEO, K. Krithivasan. TCS also has a new chief operating officer, Aarthi Subramanian, who's executive director, president, and chief operating officer. I began by asking Krithivasan about the decline in constant currency terms, which is 3% compared to street expectations of about 1.5%. Listen in.
First of all, you need to decipher the number. This also included a minus 2.8% of BSNL degrowth. It's when I say degrowth, there's nothing wrong because we more or less completed the initial phase of the program. So there's very small portion left. And international revenue went down by minus 0.5. And like I was telling Rima before the interview, we probably would have felt somewhere around another 100 basis point is where we were thinking we will close the quarter with. But even during if you remember in April, we did talk about continuing uncertainties which we are not seeing in January, February, started coming back in March. So that continued, and then we saw more projects getting delayed, paused, decisions delayed. So collectively, and the certain customers wanting to conserve cash, I think it's a question of overall global uncertain macroeconomic situation.
But the BSNL deal, I mean, there was well understood that it is ramping down, right? That's coming to a close.
Yeah.
So that was anyway supposed to happen. I think the numbers this time
I'm not saying that
over 700
that's
crores.
what I'm saying. See the numbers in the context of minus 3.3, in the context of how much is the BSNL ramped down. And as I said, international, maybe another 100 basis point, I would have been happier. But this is the uncertainty that or the unexpected nature of the overall customers' decision-making behavior that delayed things.
So how many deals got paused, deferred, any cancellations?
Not many cancellations, but delays, right? Like there are situations, there are sometimes where you have about 1,000 people working on a project. Customer decides that they can go slow, and then they say, I don't need 1,000 people, I need only 500 people for the next few months. And they're willing, because of the overall situation, they see they can deprioritize or postpone the programs. So I don't want to quantify how many, but few.
But what led to the disconnect between your own expectations and how the quarter played out? Because even when we spoke last time, that 90-day pause, tariffs being was there.
See, we in fact, if you remember, last time I was telling that I was expecting this to be short-lived. Okay, it was not short-lived as I thought. It's continuing. Like if you, we hope that sentiments revive soon, but.
So you think Q2 is also impacted? I mean,
too early to call. One, you know that we are not going to comment on Q2. But see, the overall situation, we have a good pipeline, good order book. We are winning reasonably well in the marketplace. So once the sentiments improve, we should be in a good position.
No, but there's no sign from the there's no sign from your clients who've paused the deals that they want to restart anytime soon.
Not immediately.
Not yet.
And last time you told us that those pauses are tactical in nature.
Yeah.
I mean, they're not.
Yeah. Even now I'm saying, because last time also I said, now I'm saying, most of the companies have a huge technology debt. They have to spend. It's a question of timing.
Arthi, it's interesting, as they say, may we live in interesting times, right? And these are interesting times. And how would you characterize the environment in terms of what you've seen in the company so far, and what are you driving at within the company?
I think, like you said, I think these are interesting times. And if you look at what my focus is, we're looking at driving growth across our service lines. Like Kriti said, this quarter, if you look at it, our new age services have grown. So if you look at whether it's AI, it's cybersecurity, or interactive services, many of the new age services are doing well, and they have delivered growth this quarter. And specifically, since AI is a topic that everybody is most interested in, and if you look at AI, this quarter, if I look at where the growth has come from in AI, I would say that it has come from 3 areas. One, industry-specific solutions that our customers are building. Second, Kriti talked about technology debt. So customers are turning to AI to really modernize their technology estate. So I think that's an area which is showing an uptick, especially in some industries. And I would say the third area is where as you start moving from pilots to more scaled ROI projects in AI, customers are looking at how do you do this at scale. So looking at...
Is there a way to define AI revenue? I mean, this is what we earn because of AI projects.
See, we're not doing that for a reason because AI is all pervasive. Sure. It's there in every service line. So it's hard to just call out a part of the revenue as a AI revenue.
Is it deflationary in terms of pricing?
No, I don't think so.
Okay. Because revenues, the top line it'll drive, but I mean, and we've discussed this in the past, that as we go forward, eventually customers are going to say, well, you're doing a lot more with a lot less, so well, give us the price advantage that you're seeing.
It won't be a deflationary in pricing like Aarti mentioned.
Okay.
But we believe that AI will enable you to do more than with less. Okay? But as I've been telling, eventually you'll be doing a lot more than what you're doing today. Because that will ensure that we have enough opportunity for what we have today and what we'll have tomorrow.
Aarti, you come in with a fresh perspective in that sense. For the last 2 years, the growth has struggled a bit, or it was propped up on account of BSNL. This is a tough year for the entire industry. Do you think, in a way, the company needs to look at the growth versus margin trade-off? I mean, what is your own opinion on this?
See, I think our philosophy or direction, as you may call it, has always been profitable growth.
Yeah.
Right? So I think if you look at all the new age offerings, I think there is enough demand. And especially when you look at AI or enterprise solutions, public cloud implementations, I think the demand is out there. So I think we just need to drive growth.
But you said it's profitable growth, but growth has been missing, right?
No, but we need to drive the growth.
Okay.
So I think while retaining margins, and that's what we intend to do.
So actually, we talked about, we believe good growth will actually give you more. Lack of growth probably puts a pressure on margin. But margin doesn't put a pressure on our growth.
Growth solves most problems, as they say. Kriti, just one thing, so actually just completing the BSNL point, there was expectation that as BSNL winds down, margins will improve. There will be a lift to margins. That's not happened. You've also won a new BSNL order, right?
New BSNL order has not kicked in.
It's not kicked in.
Not kicked in yet. We did have close to, I think, there was an improvement, a tailwind because of BSNL, but we also put more, we had more headcount this quarter. Okay, we be expecting more growth. We had actually added a lot of people in the beginning of the quarter. So that put additional expense towards manpower and compensation. So I think as we fine tune our overall manpower expense and other expenses in the next quarter, because this was a fairly turbulent quarter. We started off the quarter thinking that we need to be ready for all the demand.
Sure.
But when it doesn't happen, you already staffed up the people.
Sure.
But our hope is that in the next quarter...
The new TCS BSNL order, will that add anything to... I mean, there are some expectations it should be 1% of revenue for the full year. Is that... It'll add 1% to the revenue growth this year?
It could be in that range. It could be in the range.
What's the size of the...
If you have not published it, we are not going to tell you here now.
$350
From
million.
a size perspective, it's about 22,000 sites, I think. Okay. So 1/4 of the original order.
So since you call the times turbulent, last time you said that growth in FY26 should be better than FY25, at least for the international markets.
Still, for the international market,
despite a drop,
I'm still confident because we had a minus 0.5% here, but I think overall for the year we'll be able to do better than what we did in FY25 on the international markets. We're quite confident.
And overall, will there be growth in FY26 over 25?
Growth, yes. Growth better than FY25. We'll work towards it because we had about, I think, 4.2% growth in FY25. To reach that, that's looking like a tough number now. But definitely growth, definitely international growth to be better than FY25.
You know, the other number is deal bookings, right? About $9.4 billion. It's lower as compared to what we saw. And that also should that raise doubts about revenue visibility going forward at all?
See, Prashant, we always been saying our comfort range is between 7 to 9 billion. Okay, and last quarter was about 12 billion, and it was a fairly one of the best quarters we had. And TCV tends to be lumpy. I don't think it is like revenue, because sometimes you win some huge deals. Clients want to close towards the year end. They want to sign. Order bookings tend to be more. This is nothing to kind of be concerned about. In fact, we are quite happy with the order bookings for this quarter.
Aarti, can you provide some color vertical-wise? I know the problem areas, we spoke about it last time, was auto, retail, etc. But since growth is much worse than what you had anticipated, which sectors face challenges, and going forward, which are likely to still remain under pressure?
I think our technology, software and solutions vertical has done well, as you would have seen in the numbers. I think manufacturing, it's hard to club it into one. I think the challenges are in the automotive sector, and which is a global phenomena if you look at it. But within life sciences, healthcare, if you see again, healthcare has grown this quarter, and if you look at BFS, right, there are certain segments within BFS which have grown. So it's sort of, some verticals have grown well, and others hopefully will be able to drive growth in the next quarter.
Kriti, you want to add to the problem pockets that you see going ahead?
See, the slow, definitely, we had Europe had probably Europe had a bigger negative growth. In fact, North America, as you saw, has a small, moderate positive growth on a Q-on-Q basis. UK had again degrowth. In fact, interestingly, if you take BFSI North America, BFSI UK, both of them had a small growth. BFSI UK, Europe was an issue. So, and like she said, auto is an issue, but industrial did well, aerospace did well. And so there are in fact, our tech services, almost all sub-verticals of tech services did very well. So there are pockets of growth. There are some areas where we will recover.
And why is banking weak in Europe?
Banking is weak in Europe for, that we've been doing a large deal before, okay, and that's also coming to a close. So that's one of the reasons why we have extra pressure in Europe.
Kriti, just to sort of wrap it up, how would you describe as you go forward into Q2? It's Q1 has seen a sharp. Will we kind of, if this is more of a one-off, will we see a sharper recovery in that bounce as well in Q2?
I don't know whether Q2 will be a quick bounce back. I don't want to call it up because I've been beaten with what I said. In Q1, I was quite confident. Q2, I'm not sure. We have to wait and watch. But I'm still confident about medium to long term. There is a lot of work to be done, and the order book is good, and our client conversations are good. So medium to long term, I'm still confident. And as I said, I'm still confident of having a better international growth in FY26 or 25.
Welcome back. 9 minutes to go for the pre-open session, and it's all about the big sort of corporate stories, right? TCS was one. The other big one is, of course, Glenmark. Let's actually get you the exclusive conversation that my colleague Ekta Batra had with the Glenmark management. For the uninitiated, if you're just sort of switching on television screens right now, watching us now, Glenmark has signed a landmark licensing pact with a US-based pharmaceutical company to develop and sell a drug to treat a cancer, basically. The surprise element here is markets, and our colleague Nimesh had kind of sort of highlighted this in his D Street Chatter segment. But the surprise is, what markets were expecting was that the number would be, upfront payment would be around $200 million. Guess what? The upfront payment is about $700 million. So that is the big delta, the big surprise. Here's Glenn Saldana in conversation with Ekta. Ekta began by asking Glenn basically about the deal. I mean, what does Glenn make of it?
Clearly, this is a huge moment for us, right? I mean, we've been working on this for 25 years in the innovation space, and I think 2001 really is a world-class asset, right, which can be transformational for patients. From a partnering perspective, the way we've structured it is we've partnered with AbbVie for US, Canada, Europe, China, Japan, most of the developed markets, and Glenmark will commercialize this product eventually, right, in India and all emerging markets. So the two of us will make sure this asset is successful going forward. IGI clearly is a 100% subsidiary of Glenmark and has done a phenomenal job in developing this asset, getting the phase 1 data. As you know, we have phenomenal data in patients in the phase 1 trial, where the recent presentation we made at ASCO, we had almost 79% ORR and almost 30% of the patients had complete remission. And these are patients who've gone through all prior lines of therapy in multiple myeloma and then eventually come on to 2001 have shown this response. So very exciting times. We are super excited about partnering with AbbVie, great partner, huge global capabilities and huge resources to make 2001 successful and bring it to the market.
Okay. So explain the financials to us. $700 million is what you would get upfront, $1.2 billion in terms of milestones, and the remaining would be royalties.
That's correct. So we get a $700 million payment upfront, and as soon as we get regulatory approvals, that money will be received by us. The milestones, the $1.2+ billion of milestones, are spread into clinical development milestones. So as the molecule progresses to clinics, we keep getting milestones. Regulatory milestones, so as the molecule gets filed in various markets, we get approved, we get milestones. And then we get sales-linked milestones. So cumulatively, that number comes to $1.25 billion, for the asset. And then once it's commercial, we get royalties on sales, which, as you know, some of these innovative products, the life of the royalties is pretty long. So this could pretty much be an annuity if the molecule makes it to market.
Okay. So let's first understand where exactly this molecule stands. Phase 1B currently. Explain that to us. How nascent is this molecule at this point in time?
So ISB 2001 is still at a relatively early stage. The good news is we have patient data in about 40-50 patients. We have good clinical data that we presented at ASCO. So very good safety profile, good efficacy data. But it's still early stage, so it has to go through a significant amount of clinical development as we go forward.
Okay. So AbbVie is now going to take over the entire development of this molecule, we understand. When do you think that it will probably hit the market or show any kind of results?
So AbbVie takes over all clinical development from here on. In terms of time frame, I can't give you a specific time frame, but typically molecules, if you look at other assets, right, in the space, they typically take about 4 or 5 years at least to get to commercialization.
So say 2030 would be a good target to probably expect something tangible coming in from the molecule or hitting commercial sales if it is successful, that is.
So again, I can't specifically talk about ISB 2001, but typically it's about 4 or 5 years to commercialization.
Okay. Well, let's talk about how you're going to use the funds now. Let's start with $700 million, 6,000 crores of cash on books. It will be on Glenmark's books. Tell us how exactly is this $700 million going to be utilized?
So the way we're looking at it is IGI will continue development of various other assets that they have. They have a great multi-specific antibody platform technology, which they will continue to exploit. and they will continue. So they spend about $70 million a year. So that spend will continue. Clearly, a big part of this upfront will be allocated to their spends. The balance, some of it will get dividend out to Glenmark, and the rest will sit as cash on the books.
Okay. Any plans of rewarding the shareholders of Glenmark who waited very patiently for a possible R&D deal?
We'll definitely consider, right, increasing the payouts to shareholders. I think we'll put it up to the board and get that approval.
All right, interesting conversation there, Ekta, with Mr. Saldana, the man of the moment itself. Well, let's get in our technical experts. Shrikant Chavan and Mitesh Thakkar join us on this Friday morning. Good morning, gentlemen. Hope you're feeling good. The markets, though, not too good, because we're going to be starting off with a cut of around 140, 150 points. Post yesterday's 120-point downtick. Mitesh, what's your gut? Go ahead and buy the Nifty, or you believe the Nifty wants to test lower levels?
Morning, Najib. So I think, I've maintained that we might try and test 25,200 odd levels, which is a key trend decider. And the way the GIFT Nifty is indicating, good chance that we might open around those levels. So yeah, in case we don't see follow through, I would be tempted to take a long position for an 1-2 day kind of a bounce back from those levels. 25,200 to me is a very important level. I believe that there is a good chance of a bounce back, but I want to see the market reaction once we start around those levels. In case there's no further follow-up selling, then I think that will be a good time to take a long. And then the first target would be around 25,400 and possibly 25,650.
Okay. All right. Gentlemen, morning. Great to have both of you here on the program as always. And happy Friday to both of you. Shrikant, what about you? How are things set up?
Good morning, Prashant. Good morning, Nigel and everyone. See, for Nifty, it is very clear that it has broken its important support level at 25,400 and it closed below the same. So the next level to watch out for would be 25,100, 25,050 sort of levels. And there the market is having one more leg of important support. So as Mitesh said, I am also of the view that in case if we see the market is dropping to 25,100, then there we should look for taking some contra bets of going long in the market, or we should look for buying some value stocks, because the overall trend of the market is very clearly corrective pattern that we are observing right now and witnessing to the entire rally that we saw from the levels of 24,000 to 25,650. So it's a corrective pattern, and the strategy should be to buy on dips.
Okay, strategy should be to buy on dips. Well, the pre-open is started, but I think we should give it 2 minutes more and then come back to it. Let's get to trades then, in terms of what both of you would want viewers to do. Mitesh, you go first. What's on your list?
Prashant, I have a mix of buys and sells. On the buying side is Paytm, which was a call yesterday as well. Now can be bought afresh with a stop at 928 for a target of around 970. Container Corporation was also a call yesterday. I continue to remain bullish here, so buy with a stop below 618 for a target of around 645 to about 650. And on the selling side is BDL, which is Spark Dynamics. Keep a stop at 1920, look for targets of 1830, 1825. And Siemens is a sell with a stop at 3225 for targets of 3130.
Got that. Shrikant, what about you?
I would like to go short on HL, Hindustan Aeronautics. There we are seeing a good amount of weakness. It is around 4,900. The next level to watch out for would be 4,700. So it's a short at current levels with a stop loss at 4,975. And we should look for adding a few bank stocks in this particular correction. So close to important supports of 255, 254, we should look for adding RBL Bank to our positional portfolio at current levels with a target of 265 and 270. We can keep a stop loss around 247 for the same.
Got that. Thank you very much, both of you, for joining us and running us through specific trades there. The rupee is opened sharply lower. Actually, it's almost a 20 paisa lower open for the currency, which is coming through. Look at that. So 85, 84. I mean, there are no there's still no letter or anything of that sort with regards to India from President Trump's side. But there was this one news item which was doing the rounds yesterday in the evening, which is that JP Morgan Global Bond Index. There was a Bloomberg story, and it was one of the possibilities which the Bloomberg story reported on, which is that the index provider, that is JP Morgan, could actually lower the weights of India and China in the index. Remember, India just got included, and the expectation was that we'll eventually actually go higher in terms of weight. But that story essentially reported that perhaps they're going to recalibrate, bring in higher yielding bonds, riskier bonds, but also higher yielding bonds, and to sort of create that space, maybe lower the weight for some of the sort of bigger providers of bonds, which is, of course, China. India is, of course, expected to be very large as well. So that is the currency move. But we'll get more on this one as we go along. But it's a move without, of course, any trade or Trump-related headlines, at least nothing new in that sense. Coming back to stocks, the big story, Liba?
There's so many big stories with this. TCS, we're just going through them one by one. There's Glenmark, and the other big corporate headline, which came in last night, was HUL looking to undergo a management transition. Rohit Java is all set to step down as the CEO of Hindustan Unilever after just about 2 years at the helm. Priya Nair, who's currently the president of the beauty and well-being business at Unilever, will take the reins, becoming the first woman to lead India's largest consumer staples company. Let's talk about this with Abanish Roy, who's of course been tracking this company in the sector for years and years from a market lens, market perspective. Abanish, very interesting. Typically, I guess, Unilever or any FMCG company CEOs have longer tenures, right? This was a short one for Mr. Java. She's an insider. Ms. Priya is an insider, so I don't think there could be any continuity issues. But what would your first thoughts be?
Yeah, thanks and good morning. Yeah, you're right. This was a surprising development. Yes, last 2 years, Rohit definitely tried a lot of initiatives. He did the minimalist acquisition. Project Aspire led to volume-led growth. If you see in Q1, we do expect improvement in volume trajectory for Hindustan Unilever. We expect around 4% volume growth YOY versus 2% previous quarter. So there is an improvement, but we don't see any material reason for this development. Overall, we remain quite positive on Hindustan Unilever. As you rightly said, Priya definitely brings a lot of value to the table, 30 years in HUL, and she has spent most of her time in India. She has done a splendid job in the home care business where she was heading it as executive director for 6 years. And even at the parent level, she was heading the entire beauty and well-being. I think beauty and well-being, clearly HUL has some work to do, and her understanding, being a woman MD, and definitely I would say that category will see that further push. Of course, she has been groomed under Mr. Sanjeev Mehta, who did a splendid job of 10 years when the market cap of HUL went up 4 times and almost had a 900 bips EBITDA margin improvement. Rohit, of course, last 2 years, the macro was very challenging, but when he's exiting, I think the volume growth has recovered, the macro has recovered. So overall, short tenure, but he had 37-year tenure at Unilever.
Yeah. No, and also he's steered the company through a phase of immense disruption, right? Macro challenges aside, that's one part of it, but just the sheer amount of disruption with the onslaught of quick commerce. So very quickly, just revise for us, what is your growth expectation for Lever this quarter and this year, volume growth, and what you would say would be perhaps the 1 or 2 things that you would expect the new CEO to really focus on to get the growth levers back on track?
Yeah, good question. So we expect 4% volume growth and sales growth around 4.5%. So that's a clear improvement versus the past few quarters. And we expect that trend to continue because clearly palm oil has corrected sharply PFAD. So that benefit will come in H2 for Hindustan Unilever. So they can flow back more towards growth in terms of aggression. And coffee cost has also corrected 30%. So Priya, they are very good credentials, but definitely lucky also in the sense that volume is improving. The margins will be there to push more advertising, more promotion, more innovation. And yeah, last will be essentially minimalist acquisition in terms of doing the D2C more aggression. We see that HUL will be more aggressive on more acquisitions in this space, D2C, and clearly parent, the CFO became the MD few months back at the parent. So he's very aggressive on India, very focused on India. So overall, we see this as a non-issue. We see that definitely Rohit did a good job in 2 years, but macro was very challenging. Now when macro is improving, clearly Priya further can take it up. So we are positive. We see 3055 as the target price for HUL.
You said 5% full year volume growth? This quarter you said 4%. Full year how much?
Yeah, full year should be around 6%. Because
6%.
we see expectation of more improvement. As I said, now palm oil is down and coffee is down. So
yeah, you explained.
We'll be able to fund the growth.
On a lighter note, I got a call from HUL late in the night.
Okay.
Said, well, be ready to start using your Malayalam.
Oh.
Priya Nair.
Priya Nair, oh.
I said, but you know...
It's all the South Indian women taking charge. When there's Aarti Subramanian at TCS, Priya Nair at HUL, the women from the South. Always
women
strong.
in general. But,
and women in general.
You know, the other thing, of course, I think Abneesh, I don't know if he alluded to that. Abneesh, you know, the point is, of course, the environment was tough, etc. The other thing, of course, also is that, Mr. Java came, 20, 25 years overseas, right? I mean, then he was dropped in India, right? Whereas Priya Nair is very much been here and kind of sort of headed divisions, etc. Does that also, will that also make a difference? We'll see the execution and what she does, etc. But is that an important difference compared to what we saw under Mr. Java and what perhaps we will see under the new CEO?
Yeah, I think that definitely matters because Priya's experience has been there in India when all this D2C disruption happened. So definitely in beauty and well-being, which is a very focus area for HUL and Unilever, she has the ability to take it to the next level. So to that extent, that should definitely help. And being a woman MD and that part of the understanding will also be helpful. So yes, I do see that the very strong India experience of Priya Nair, and she was heading that part of the business at the parent, and she did a splendid job in the home care also. So it is not that only beauty and well-being or personal care is her forte. In home care, she was the executive director for 6 years, and we saw massive premiumization and massive margin improvement and market share improvement in that category. Of course, Sanjeev Mehta was grooming her, and now we will expect that also to take the company to the next level.
Well, hi, Abneesh. Good to see you. When, as you said, Rohit took over at very challenging times. Priya's taking actually at an opportune time when the macro tailwinds, inflation is cooling off as well. Rohit had to face a lot of challenges at that point of time. That said, do you think that, this is a big knee-jerk reaction? Because at Unilever PLC as well, we saw a change of guard, I think within a year or so. And out here as well, change of guard within 2 years. Viewing Priya as a change agent post a 5% pop-up in the stock today, would it be running ahead of itself?
So three things. One is investors have interacted with Priya in the events, analyst meets, etc. So to that extent, she's a known face. So I don't see any problem of any knee-jerk negative reaction. So yeah, near term, medium term, I think the stock should do well. And in terms of the overall leadership change, if you see, yes, it is being seen as a positive. So I don't see any knee-jerk negative reaction, but medium term and short term also, we see the stock doing well. The sector is back in favor. If you see, we are going to see a sector churn, right? We have seen some of the other results of tech companies, etc. So we are expecting that investors will shift more towards the staples. HUL clearly is the big daddy there, so that will also benefit. So yeah, we expect a positive reaction to the stock in the near term.
Got it. Okay. All right, Abneesh, thanks a lot for joining in. That's the big mover from the Nifty pack itself. HUL up closer on 4%. And Abneesh saying that it's an opportune time. Macros are working in her favor. And we're seeing a shift to a lot of these companies itself, the consumption companies that actually have been underperformers in the last few years. So good time for those shareholders, probably in the near to medium term. Thanks, Abneesh. Well, let's get in our 9-10 call then. Mitesh Thakkar is back with us. Mitesh, what do you have?
I'll go with a buy on Paytm. Look at targets of roughly around 965 to 970.
Paytm, got that. All right, 965, 970. What about HUL? What's the view out there? The stock is starting off 4% higher. Last few years haven't been, given any returns. But the prior 4-5 years, in fact, the stock tripled. What's your view after it opens up 4-5%? Where is it headed?
So, Nigel, my initial feeling is that I was looking at a target of around 2,500 to about 2,520 when this move started about 2 weeks back. We will hit those levels, I think, in the opening. Maybe you would want to take some profits. But eventually, I do believe that the stock has potential to head towards levels of around 2,650. But, it's typically a low beta stock. So therefore, I think the first suggestion would be to take some profits and trail your stop losses and see if it can get past 2,520 and sustain.
What about TCS? That's the big loser. That's down 2.5%. The stock is, I think, already lost 20% in the last 6-7 months. Valuation-wise, it's trading below its 5 or 10-year averages. The question is how much is in the price, but on the charts, how is it looking?
So the entire IT pack, was slightly negative. We had sell calls on HLL Tech and Tech Mahindra. I think TCS could even go down to about 3,200. Doesn't look strong to me in the short term. I think there'll be pressure, and 3,200, which was the low which the stock did in April, could be revisited.
There's a minute to go for market open. Mitesh, thanks very much. Coming back to you later. Rima's here. Rima, you got 30 seconds. Tata Lexi is the focus.
Well, it's a disappointing set of numbers. On the top line, revenue has fallen by 3.9% quarter-on-quarter. Year-on-year, it's a drop of 9%. And that's putting pressure on the margins. Margins are down 200 basis points sequentially, 20.9%. And in the last 6 quarters, we've seen the margins of Tata Lexi fall from nearly 29% down to about nearly about 21%. Profits have also consequently come under pressure, 16.2% lower. The only silver lining is the management commentary, where they are saying that 2 out of the 3 verticals will get back into growth in Q2, and therefore they're hopeful things will recover and there will be an improvement in the margins and bottom line.
All right. Well, that's 30 seconds. Rima, thank you very much for that. Well, I think we've got market opening coming up in just a minute or so, less than a minute actually. The clock will come up on your screen. And of course, we'll be watching out for 3 top names which start out. 100 points, clean 100 points lower on the Nifty is what you have. TCS is down 2.5%. And the other one, of course, is Lever, which was up 3.5% at the end of the pre-open session. And of course, Glenmark, which is limit up 10%. There you go. Glenmark, of course, remember, will, the futures, the price will be on freeze for temporarily, and then of course it'll move on to the next circuit levels. The freeze will open up after a couple of minutes. We've got the first rates coming up on your screen. The Nifty is down about 1/3%. The Bank Nifty is absolutely flat. Actually, the Bank Nifty wants to come into the green, 56,940. The mid-cap index is down 0.1. The small-cap index also will come up on your screen. And I think there is some amount of red there as well. Yeah, 0.2%. 25,250. Let's get to stocks pretty quickly, but heat map on your screens. Before we do that, I think it should be more down than up to begin the session. And I think we'll get a glimpse of what Lever at least is doing, which is very much part of the Nifty. And of course, the other end of the spectrum is TCS, Infosys, Wipro, HCL Tech. I mean, IT, of course, taking a bit of a hit this morning.
Yep, 100 down. Also makes us one of the weaker markets across Asia, by the way. Other Asian markets are either flat or positive. Let's look at the losers. No surprises here. TCS is down 2%. Wipro is down 2%. Infosys 3%. Tech Mahindra, HCL Tech, all these stocks are down. And remember, it's not like there was a big build-up in IT stocks this time before Q1. But despite that, fresh negatives, all these stocks are lower. What else? Hindalco, Mahindra and Mahindra, Trent. These are stocks that are losing between 0.5% to about 0.75%. Reliance is adding to the bulls' problem this morning, down about 5 rupees on Reliance. HDFC Bank is lower by about $5 as well. ONGC, these are some of the names on the weak side. Okay, let's talk about what's working for the market. Lever for sure, 2.5% up on the news of the management change. Kotak Mahindra Bank and IndusInd Bank are trying to offer some counterweight along with SBI to the HDFC Bank pressure. Actually, HDFC Bank is the only large bank on the downside. Most others are positive. And ICICI Bank is absolutely quiet, sitting on the fence with just a 1 rupee up move right now. But that's pretty much it on the gainer side. SBI Life, Dr. Reddy's. These are some of the other stocks that are managing a little bit of green. But no green like Glenmark. Look at that, 10%. And what a beautiful run on the stock. I mean, 1 year it's up 50%. This year, 2025, is up 30%. And now, builds on that gain with this stupendous news coming in for the company. Well, that's right. Well, keep an eye out on Oswal Pumps. That's the newly listed company.
The stock is actually down 5%. I think they came out with their Q4 numbers yesterday. That's dated numbers. But though the numbers look pretty okay, I think the street is giving it a little bit of a whack, or maybe some profit taking is what we're seeing out there, because now it's down close to around 7% and it's falling on decent volumes as well. So that's one on your radar. Tata Lexi is down 3.5%. It's come off a little bit from the low point of the day. So I'll keep an eye out on this particular name, because the low of the day, in fact, was much lower. I think it's come off close to 3% from the day's low. It's still down close to around 4%. But there appears some kind of a bounce from the day's low. So keep an eye out on that name as well. IRDA, that's the one that's struggling. The gross NPA spiked up to around 4%. We have that Gensol account that got accounted for. But there was another account as well. So asset quality worsening over there. We'll speak to the management soon. But the stock has opened up with a cut. Zee Entertainment, the investors have rejected the proposal to issue warrants to key shareholders. The stock is down close to around 3.5%. SPML Infra, that's another one that's been awarded a 385 crore rupee water project in Rajasthan under the Jal Jeevan mission. So that stock, I think, in the last 2 months has moved from 180 to around 280 very, very swiftly. So that one is on the radar. Volumes large out there. And Anand Rathi, that's actually the result of the morning on the upside. That stock, in fact, has opened up well in the green. They have managed to meet 88% of the FY26 AUM guidance. The street likes that. The margin has improved as a cost of income as well. Cost-income ratio has dipped by 570 basis points. So that's the one that's reacting positively. And as we did that market check, the markets, in fact, the Nifty has cut its losses by half. We're down only around 60 points as we speak. Prashant.
Absolutely. So, the low is 25,244 today, right? I mean, I think that maybe if I got my levels jumbled up is another matter. But no, actually, that is the 20-day moving average. That's the level we put out in the morning as well. So the market actually basically kissed the 20-day moving average. And then from there, it's bounced sharply. It could be a little lower, a little higher, but broadly, I mean, that's an important, the 20-day, at least in the near term in terms of directions up and down, important for traders, important tool for traders as well. So hit the 20-day, and maybe we should put it out as an alert as well. At the lowest, hit the 20-day, and then it's actually bounced from there. Exactly there. So 25,290 is where we are at. Okay, let's just quickly, IT, of course, is the biggest cut. Maybe just a quick look at the Nifty IT index without going into all the stocks. But the IT index is down 1.25%. So that's the pressure. That's where the pressure is coming from. Oswal Pumps is a recent listing. Oswal Pumps is coming up with a 5.5% cut, in addition to what Nigel and Surabhi mentioned. And there is a Mahindra & Mahindra, which is down 1.5%. So with Mahindra, it'll come up on your screen. There is, and we'll have Pariksha join us a little later. I mean, the talk of Tesla is back. Tesla in India, right?
It's not just talk. I think now it's official, right? 15th of July?
So,
Sean's heading to the showroom. It's here in Mumbai where they're opening.
But I can tell you that Parikshit is heading to Mumbai to cover Tesla in Mumbai.
That launch, yeah.
And it's. I think that is the reason why Mahindra is taking a bit. I mean, markets are all-knowing, right? I mean, they react so fast.
Just a word on this Tesla threat actually has been a good omen for Mahindra and Mahindra shareholders, because every time there's that threat, the stock falls and then
you buy and then it rises higher.
So, let's see whether that plays out. But past evidence suggests that when it gets whacked because of Tesla, then you have those notes. They're very, very different markets and different pricing and different scalability and different everything. So I'll keep an eye out on this, whether or not this dip is used as a buying opportunity on Mahindra & Mahindra.
Let's actually bring in Venugopal Gare, right? He's, of course, India Head of Research at Bernstein. Venu, good morning. Great to have you with us here. And Venu, of course, is someone who, I don't know if you still do, Venu, but you looked at autos very closely. And actually, you have a few of those companies under coverage. You were very bullish on M&M a few years earlier. I remember having those conversations. What is your sense? Just throwing that discussion to you. What your perspective of this entire Mahindra, Tesla reality now here in India? What's your sense?
Thanks, Prashant. I was listening to your Tesla sort of comment on Mahindra. Honestly, it does not matter. Tesla, pricing-wise, will be at a level at which it's going to sort of, target a very, very small market in India. And more importantly, we're not that bullish on electrification in the four-wheeler sort of a space for a fairly long period in India, because I don't think charging infrastructure is ready yet to be able to convince people to sort of buy those products. And pricing wise as well, if you see, most of the launches, even for the Indian companies, are happening at a premium sort of a pricing. So, this Mahindra stock price, whatever that you see, 1% really doesn't matter. The sort of a decline that you see has nothing to do with Tesla, honestly. It is more about the fact that we're heading into a result season in general, where there isn't much of a positive vibe with respect to margins in general in the sector, Mahindra included. And remember, another aspect of it is things like rare earth supply and potential delay in production for vehicles in general across the board is another thing which is sort of should impact auto companies in general in the near term.
Okay, so you continue to be in the camp, and I think that camp has a lot of followers, that M&M is not going to be directly impacted too much, even with Tesla's entry.
Just for the heck of it, take the other side.
Okay.
Tesla and their team in India obviously know all this, right? That just out of they're priced out in that sense from where the bulk of the SUV buying or whatever that category of consumers is. So wouldn't they try something new? I mean, they surely know this, or are they planning to sell very few cars in India?
So the reality is this, that if you were to just think about it, we wanted Tesla to come to India, and I don't think Tesla was very keen to come to India. And I think that is
now you put it on its head. Go on, sorry.
Absolutely, that is a reality. Look, China benefited significantly from Tesla's presence in China. A lot of the sort of development that you see in terms of capability building, which happened across the board for a lot of OEMs, from a talent point of view, was to a large extent, I would probably say, also supported by Tesla's presence out there. And I think India needs companies like this to sort of create talent pools and, more importantly, create manufacturing. Remember that we yet don't know whether they are going to bite with respect to creating a local facility out here. So at this juncture, Trump tariffs are also sort of just about looming. So we'll get an idea if anything is sort of happens around that front as well, where you might probably end up being able to import at lower duties from the US, right? And that is probably the positioning that players like Tesla would want to have, even though despite that will be costly or very costly in India. So it's more a distribution gateway for them. And think of it in a different way. When companies like these, even if they think about venturing and creating a presence, they think of 10, 15, 20 years. I don't think investment horizons for anybody is in that time frame. So we'll see what happens 10 years later.
Okay. All right. So let's wait and watch. It's going to be an interesting fight, or an interesting landscape, to say the least, whichever way things go. Venu, hi, great to have you on the show. So lots to talk today. I'm going to quickly get to the FMCG space. Look at Lever, by the way. Lever is the biggest winner on the Nifty right now, 4% up move. Let's pull up a Lever 1 week chart. Lever is the best performing stock on the index this week. Best performing stock on the index in the month of July as well. Now there's a leadership change, but it's not just about leadership, The market is perhaps trying to sense something or smell something, that something is turning finally in FMCG. Do you think this is a bit of a false alarm, or could this be the real deal after I don't know how many quarters and years?
Okay, so interesting conversation. So I had been in a very interesting camp because I was underweight consumption and staples for a very long period of time. Of course, parts and parcels would be buy, auto buy at some point of time, durables buy at some point of time, things like those. But for the first time heading into this calendar year, I upgraded the consumer staples to a neutral. Okay, that is the best rating I could have gone to, neutral, because it's a very costly space with growth to a large extent being still priced in from a valuations perspective, right? But the idea was that I didn't want people to short consumer staples this year. Part of it is because rural data points had started to pick up positively from November, so that gives you a small positive vibe for consumption in general. We've taken a call that monsoons will be decent, that we could have gone wrong on that, but that's also played out at this juncture. And number 3 is tax cuts, which at the margin does lead to some positivity on consumption in general. So these are all the variables which go into relatively positive consumption thesis compared to maybe what it was last year, right? So that's the entire framework with which we work. Now, change of management led stock price increases and things like that. I don't think those are important, but I don't think that's like the broad driver for what we would have, taken a call on consumer staples. Number two, remember that there have been some positive data points from some companies who have given this pre-quarter, updates as well. So that's also sort of rubbing off at this juncture. And lastly, I would say that, look, branded companies, especially on the FMCG side, in the medium term is not 10 years, medium term is maybe 2 years to 3 years, will have an impact because their distribution channels are getting disrupted. And I think that is inevitable. So you will see a resurgence or a creation of a much larger pool of brands out here. So it's very hard to take a structurally positive view on some of these larger consumer sort of brands and incumbents.
So you don't expect a meaningful pickup in volume growth this year. Would that be right?
Okay, so I do expect a pickup in volume growth from really bad volume growth last year, right? So that is good enough for you to create some degree of positive returns on these companies. But the idea is that when you see the first sign of, which of course you'll see in this quarter as well, of a volume uptake, don't get carried away. So this is not like the next 3-year re-rating story. Okay, so you basically to book your profits is the view, right? Not today. I mean, I haven't shifted to an underweight yet, right? So that's the way I would look at it. I think there are going to be challenges eventually in a year or so. So let it run up a bit. It can't run up a lot. Sell after that.
Hi, Venu. Good morning. Good to see you, Ben. We've got 2 earnings coming in from the tech pack, both of them from the Tatas. And, it's been a little bit disappointing. The commentary as well, a little bit softish. But, both those 2 stocks, initial reaction is that dip is getting bought into. What's your view on tech? Clearly, commentary is still a little bit feeble. The hope is that we'll see a recovery in the second half of the year. However, some of these stocks, if you compare it to the 5-year or a 10-year, on a valuation basis, there is some support. So your view on tech, and also briefly, I want you to tell us about the valuations on the mid-cap side of things. Because mid-caps always traded a big premium to the Nifty, I think 50-70%. That's come down a little bit, though growth as well has cooled off. So tech and mid-cap valuations. Please go ahead.
Okay. So firstly on tech, this year I had moved to an equal weight on IT services from being overweight in the prior year. Okay. So I was a bit nervous about anything to do with US. So it wasn't about just IT services. For healthcare, I had moved to an underweight beginning of the year, right? So both have exposures to US. Now, having said that, there was a lot of concerns around lack of visibility for corporates, discretionary spending was an issue. Then there was another layer of challenges around AI and how it could sort of impact the IT services pack and things like that. Too many variables to essentially focus on. So we decided to neutralize a portfolio beginning of the year. Now, what we see from companies reporting at this juncture, 2 of the companies that you mentioned, TCS was like, yeah, I mean, you can argue that wasn't really a great quarter. But beyond a certain stage, I don't think one should have anticipated a great quarter to start with. Auto ER&D companies, especially the one that reported, and the others that you will see will have muted numbers globally. Autos, we've seen some challenges for the last couple of quarters anyway. So that's not really a major surprise that way. But going forward, what I'm actually looking forward to is at what stage to move from a neutral to a positive view. Now, what to me is important is how does the US economy shape up, for the rest of the year and let's say first half of next calendar year. And I would probably argue that US economy is essentially not in a bad shape. If you look at the tax, the big beautiful bill which has been sort of announced, in some way it's effectively a transfer of money to consumers out there. And to push for capex from corporates. These are all like positive things. They've also going to be expanding some expenditure on the defense side, where there's a lot of play for ID companies, etc. So I'm of the view that we're probably scraping the bottom, for this sector in terms of sentiment and absolute numbers. Things might look up later in the year. I haven't really proactively yet moved into a more positive view at this juncture, but I would watch out for that.
So still underweight on IT, right?
I mean, I cut it from an overweight to an equal weight in January, so that itself is a good enough sign that, I turned sort of cautious. Let me put it this way.
And mid caps, very quickly, how are you feeling about it?
Mid caps were trading at a 75% premium to large caps in June, July last year. They are now at 35% premium. I mean, anything around 10 to 15% premium is amazing. We're not there yet as yet. So we're not like literally cheap, but I think 35% premium is fair enough, because if you look at the earnings for differences is justifies that sort of a premium. So we neutralized a mid cap to an equal weight about a month back, compared to being underweight related to Nifty for over a year. What it means is I would proactively look for opportunities, but with relatively lower expectations for returns, because it's still like costly. So that's a broad view on mid caps. I'm not completely against mid caps anymore.
Yeah. We've discussed two large sectors, Venugopal, FMCG and IT, and both, you've got similar views that you're watching very, very carefully to see there's some sustained, meaningful pickup, at least at the end of the negativity. I think FMCG is a little better. That's neutral for you. Let's see if IT can at least, as you're saying, it's the bottom pretty much, will really help the cause for the index overall as well. Thank you so much for joining in. Great conversation. You have a good Friday, and we'll look forward to connecting again soon. Well, with that, we are, of course, very, very focused on earnings this morning. And IREDA is the next company on our radar. Stock's been down almost 5% since the open on the back of what looks like a bit of a weak Q1 print. Mr. Pradeep Kumar Das, Chairman and Managing Director at Indian Renewable Energy Development Agency, is with us now. Mr. Das, thank you very much for joining in. Actually, I want to start, before we talk about growth, I want to start with the asset quality pressure. Some of it happened because of your loans to Gensol Engineering, which you had to recognize as NPA. But I think there was one more account. So can you just take us through whether this is just a one-off with two very specific accounts, or is there some other concern, larger concern building up on asset quality?
Yeah, very good morning, and thank you for having me here. First of all, the NPA, particularly what we're talking about, which is grown up, out of the total NPA, as you have already said, Gensol. So Gensol, the market is well aware of it, and that is purely because of the promoter-related matters, rather than anything to do with IREDA or with respect to the sector. Second, the other group what you are talking about, that is not now, that is way back of 1920 of a group, and they were quite badly affected by the Andhra government decision to dissolve the PPA. And there was a High Court stay on not taking any coercive action and not to recognize it NPA, but we had made enough provision since 1920 onwards. And if you see, roughly 1,450 and odd incremental is there in NPA, whereas our provision has gone up only 360, and this provision is on account of one account, that is of Gensol. So as far as the sector is concerned, I don't think there is any major issue. And Andhra government's decision, which is already now, it's a history now. And the group is working out, and there is a proposal in pipeline. So I cannot divulge on the proposal on this matter. But simply I can tell that in last 38 years, we have financed 1.62 lakh crores. And our cumulative write-off is 135 crores. So that speaks about the command and control of...
No, absolutely. Absolutely. Sir, just a quick follow-up question. Two-part question. First, if you could tell us that if these are isolated events, then your NPA, which shot up to 4% in Q1, on a full-year basis, what is the range that you will work with? And this Andhra issue, which impacted one particular customer, was it a customer-specific legal issue that's playing out in the courts? Or could it impact your other exposure to Andhra as well? I mean, other entities that you're lending to in Andhra?
So by and large, those who are having exposure in Andhra, they had all impacted. But the bigger groups who's having multiple activities and all, they could manage to sell through that. So those who are groups completely concentrated on larger accounts in Andhra only, they were badly affected, and it is one of that. And we do not have major account as such, which we are envisaging that in the time to come. And look at 1920, we had double-digit NP of 10. And we came down to almost below 1 in the last 4.5 years. These four also we are confident in the time to come. And it's just this quarter it has come. And we are confident to sort it out. And as I said, if our cumulative write-up in last 38 years is only 135 crore against 1.62 lakh crores of financing, that to new and emerging technology handling, so we are quite confident. It is just a matter of...
So where will your NPA levels come back down to, sir, by, say, Q2, Q3?
You are asking me what will be the next quarter NPA?
No, for the full year also. If you could just give us some sense, because you're saying these are aberrations, these two events. So full year, should we expect 2% NPA, 2.5%, less than 2%?
Exact figure, it will not be appropriate for me to tell. Now I can tell you that General Matter already IRP has been appointed, and it's a vehicle which we had financed, and we had financed for 5 years. Many of the vehicles, 3 years has been paid and 2 years has been repaid. So balance period, if you see in a vehicle, the life is 10 years and the battery is 6 years, and our loan was 5 years. If you look at the moment the IRP appointment has been made, and if you look at the IREDA management's approach to handle this transaction is quite appreciable, because we're the first lender who approached to the NCLT and took the approval from NCLT to appoint IRP and to go ahead, because our intent is to do it. Because we understand there is huge good economics in the sector and business model. There is nothing wrong what we have envisaged so far. So therefore, it is a purely promoter-related issue. So once we take back the control of the assets and we can rework to again engage other agency or even outright disposal of that, but we do not envisage any major dent in this kind of assets.
What about any major fraud, sir? Because this hetero renewable energy, there's a small fraud that's been detected over there, 8 crores, I think so. The street is a little bit skeptical on this. You believe that most of these untoward or one-offs are already there, already declared, or are you getting a little bit nervous about the book?
No, first of all, we are not at all nervous. See, the fraud in the banking industry is not new, and for IREDA, probably it is not that much. So that is the reason when I'm talking again and again. If in 38 years our only cumulative write-off is 135 crore against financing of 1.62 lakh crores. So despite all these stray cases, we have managed to sell through this. See what is happening in this fraud. One case what we have already reported at JT Road, and maybe you see we have post this Gensel issue. In fact, it is a huge blessing in disguise for the team now. The quite good learning and all the accounts. We are sanitizing and scrutiny, review, monitoring has been tightened. So our project monitoring has been strengthened quite a lot now.
All right. I'll tell you what, so the problem is you did a QIP, right? And investors were not seeing these sort of results coming. And that's why some investors are a little bit jittery that why all this has come about after that. So that's why, the investor community is a little bit jittery. Let's keep that aside. Let's get to a few numbers. What about the book, the growth? What kind of growth can we work with? And what kind of NIM should we be working with for the remainder of this year?
If you look at the NIM, we are improving gradually. And the borrowing cost is also gone down. So we are quite confident. We have got 54 EC sanction. Definitely we are targeting to buy to the tune maybe around 4,000-5,000 if we can get. Then around 12 to 15 basis points of average cost reduction is going to happen. That is for sure, because we are waiting for this for quite a long time, since 4.5 years. Post by joining the company, I used to pursue. Finally, we have got the approval yesterday, and we are grateful to finance minister for this. Yes. And probably we should have got this much before. So this is a sector, and IREDA as a company working on new and emerging, we do not have any kind of specific benefit. But today in the country, we do not have defined green taxonomy.
Yes,
Mr. 100% green, we are not getting benefit. Okay, Mr. The investors' concern as far as QIP is concerned. See, when we did the roadshow for QIP, the Gensel matter was already in. And post Gensel, we have done the QIP and it was quite successful. And we are confident that once we have the investor meet and interactions, the kind of clarification what I'm giving now, once it's communicated them well, and I don't think there will be any kind of doubt.
Okay, so can we get some numbers now, please, on margin? Can we get the net interest margin number, the final margins for Q1, and what your expectation is? Also, you've been eligible for the 54C bonds, I think. So overall, what is the decline in cost of funds? What is the margin expectation for this year?
And also, so if you're giving us numbers, just give us the growth outlook as well. Is the growth sustainable? Yeah. Numbers we're looking at, I think on that 54 EC, you mentioned that 12 to 15 basis point cooling off in cost of borrowing. So I think that's out of the way. Give us a guidance on margins and is the growth sustainable? Please go ahead.
If you take out this NP and other things, our growth is phenomenal. Not only now, 21 quarters continuously. And we are confident the way the sector is growing, we are going to get the market share what we have enjoyed in the earlier. If you look at the already almost 14 gigawatt of capacity addition has happened in the country against annual capacity addition of 29.9 gigawatt last year. Right. So what in a year the country did, in quarter it is already been done. So the speed for 50 gigawatt of bidding every year, 50 gigawatt addition in a sense by the MNRE, that is already in the place. So we are going to have this kind of momentum what we had in the past. We do not have any doubt in that.
Okay, we wish you the best of luck. Thank you for joining us and answering all those questions, sir. Appreciate it. Well, let's revisit Glenmark once again in a slightly more detailed way. Stocks, of course, locked up in upper circuit. The pact with, the licensing pact, much larger upfront payment of $700 million is what got the market excited. On your screen, this is a slice of that conversation we played out bits of earlier as well. Ekta speaking with Glenn Saldana. Listen.
Clearly, this is a huge moment for us, right? I mean, we've been working on this for 25 years in the innovation space, and I think 2001 really is a world-class asset, right, which can be transformational for patients. From a partnering perspective, the way we've structured it is we've partnered with AbbVie for US, Canada, Europe, China, Japan, most of the developed markets, and Glenmark will commercialize this product eventually, right, in India and all emerging markets. So the two of us will make sure this asset is successful going forward.
So explain the financials to us. $700 million is what you would get upfront, $1.2 billion in terms of milestones, and the remaining would be royalties.
That's correct. So we get a $700 million payment upfront, and as soon as we get regulatory approvals, that money will be received by us. The milestones, the $1.2+ billion of milestones, are spread into clinical development milestones. So as the molecule progresses to clinics, we keep getting milestones. Regulatory milestones, so as the molecule gets filed in various markets, we get approved, we get milestones. And then we get sales-linked milestones. So cumulatively, that number comes to $1.25 billion, for the asset. And then once it's commercial, we get royalties on sales, which, as you know, some of these innovative products, the life of the royalties is pretty long. So this could pretty much be an annuity if the molecule makes.
When do you think that it will probably hit the market or show any kind of results?
So AbbVie takes over all clinical development from here on. In terms of time frame, I can't give you a specific time frame, but typically molecules, if you look at other assets, right, in the space, they typically take about 4 or 5 years at least to get to commercialization.
Okay, well, let's talk more about this deal and the sector growth outlook. Joining us now is Suresh Subramanian, partner and national life sciences leader at EY. Thanks very much for joining us. Suresh, pull back a little bit and talk to us about the significance of the deal, the largest deal of its kind, I think, in the Indian pharma space. How are you looking at this? And we'll get into specifics.
Yeah, hi. Thanks for having me. I think this is a significant deal in many ways. One is the payouts, as you can see. Glenmark has got a good deal on a very good upfront milestone payments. And this comes on the back of very good phase 1 readouts, right? These drugs, the 2001, belong to a category of trispecifics. We have heard of monoclonal antibodies, whereas these are multi-specific drugs, which are antibodies, which kind of engage with both the tumor cells and the immune cells, right? So their power to express and provide cure is much higher with much lesser side effects. And the world is moving to, from chemotherapy to, immunotherapy. And now the whole area of multi-specifics are indeed the future. To AbbVie, AbbVie buying this is in itself an endorsement, if you may. The BEAD platform that Glenmark used to make this product, it kind of validates that platform as well, right? And it also kind of validates in some ways, values the pipeline that Glenmark is building on this platform. So I would see this as and just to go one step back, what it helps AbbVie is to kind of play more aggressively in the 30 billion, multiple myeloma market, which probably, by the time it comes will be a trifle more. So I think it is a win-win for both sides. For AbbVie, it complements the portfolio of their modern anti-cancer drugs, the ADCs as you call it, and this is a very close cousin of the ADCs. So in the first-in-class tri-specific. So I guess that's what makes it special. But it's kind of value adding to both.
Absolutely. And also what makes it special for Glenmark shareholders is just the sheer quantum of money that the company is all set to receive, $700 million upfront and potentially over $1 billion over the course of the next few years if things go as per plan.
Annuity through royalties, right?
Absolutely.
If you look at Humira of AbbVie, that touched 20 billion. It's still 10 billion 10 years after patent expiry. So you can imagine what's the length of these category of drugs and their dominance in the market. So that's another big thing as well.
Absolutely, Mr. Subramaniam. For a second, I just want to zoom back out because what happens is that when you get good news, I mean, that's human psyche, right? We really want to latch onto it and believe that it is a defining new moment. And while it might be that moment for Glenmark as a company, and that's what Mr. Saldana was saying, that it's been 25 years in the making, this milestone. But for the industry as a whole, I mean, does it signify a change? I mean, is this just a Glenmark event, or is it some sort of pharma industry event for the industry here in India, where breakthrough innovation simply has not come through over the last many, many years?
Well, I think it's beginning to happen. We talk about Zenic, the anti-infective from Wockhardt. We're beginning to hear shoots now, and that if Indian pharma is to move from the 52 billion that it is today to 130 billion by 2030, that one point of inflection that will take it to that number is innovation. So there are many companies that are now investing in the transition from small molecules to large molecules, where a large part of the innovation is happening. And that investment is happening, and I know of many of the top pharma in India investing. Second is you have the CRDMOs who are doing contract research and discovery. They work for global companies largely. So from a platform and from a capability perspective, there's a lot of work already happening. It's just that they need to be converged, they need to be leveraged, and they need to be nurtured. So I think Glenmark's story today, that there is commercial value of this kind, is a great, I would say, enhancer of or motivation for the rest of the industry.
Mm-hmm. So if I were to ask you, which could be the next Indian company that could deliver something like this, an R&D breakthrough, a novel Indian drug? You mentioned Wockhardt. I mean, how do you rate some of the other large players? There's Sun Pharma with, of course, the Spark Sun Pharma Advanced Research. There's Reddy's. Who or which entity would you keep your eye out on next couple of years?
Well, I know it's a pertinent question for the program, but from the perch in which I'm sitting, I don't want to comment on that. But it will be good to say that most top companies are, thinking global, and they are getting into this realm. So I won't be surprised in the next 5 years.
Is financing and funding at all an issue? Because I know that most large pharma companies are listed. There are shareholder implications, and how much money can you put to work? Because these are long gestation programs, right? So is financing at all a constraint? What is what could be the potential constraint for the other large Indian pharma companies?
Yeah, no, I think it's a great question. Look at this deal, right? What does it tell you? Post phase one, the deal has happened. So once you find value, potentially all the cost of 1.6 to 2 billion is in the development phase. You kind of find partners or find an arrangement like this that you do. So my thing is there will be more candidates. You need deep pockets to take it end to end. But I think the whole global pharma is going through doing things in pockets, outsourcing parts of R&D, and also probably kind of doing deals like this that during the course of the research and development process value chain, if you may. So I think there are many incentives for continuing the research. You can kind of cash out on the value at any stage based on the pockets that you have, or get strategic partners to kind of drive the whole thing. So I think there are many models available now than it was before.
All right. Thanks very much for that, Suresh. Great speaking with you. Appreciate your time here. A good perspective. We'll take a quick commercial break here. Coming up at 10 o'clock mark, markets, of course, have bounced quite nicely after hitting the 20-day moving average early on. I mean, right at the word go. On the other side, we put the focus on the insurance space. Expectations, this is quarter to quarter stuck. Our preview, deep dive preview of a sector a day. We have the JM Financial Institutional Securities analyst joining us to help us with that. Stay tuned.
Welcome back. Just a quick look at the market, which is still nursing a cut, but it's lesser than how we opened. Now it's about 60 points lower on the Nifty, a little bit of a red on the mid-cap and the Bank Nifty as well. So that's the market for now. Let's quickly move on to our next discussion. The insurance sector is on the radar. June life insurance data has been a mixed bag. So how will the first quarter earnings season play out for this sector? To talk about this, we have Raghuvesh, who's the insurance and capital market research analyst at JM Financial. Raghuvesh, thanks very much for joining. And I briefly saw your note last evening where you're expecting that at least for the life insurers, margins should start improving. And growth has been very low in this quarter so far in terms of just the premium. But you still have a positive view on life insurers. Tell us why.
Yeah, hi, Surbhi. First of all, thanks for having me on the show. Coming to growth, as you mentioned it. Last year, the first 2 quarters, growth was very strong for the private sector. In life insurance, 24% YOY, which is much ahead of the historical trend of around 15-16% growth. On that base, the growth is optically looking low in this year. If we look at a 2-year CAGR, the growth is pretty fine at around 15% for the private sector. The expectation is as the year progresses, the YOY growth starts looking better. And we have already seen that in the first 3 months. Yesterday, the numbers which came out, the private sector itself delivered around 13% growth in the individual business, which is, again, moving towards our trend of a yearly expectation of somewhere around 12 to 13% growth for the sector. And that is largely in the price, is my sense. On the margin front, last year, the growth actually came with very strong sales of market-linked ULIP products, which are actually low margin for the insurance companies. As the mix of products moves more towards return guarantees and pure risk products, the expectation is margins should improve as the year goes on.
But for a company like, say, HDFC Life, I mean, in a tough year, so far this calendar year 2025, stocks already up 25%. It's done better than a lot of other large cap Nifty companies, right? How much of this is in the price? And from here on, what is the trigger? Margin improvement? If so, how much improvement? Will it be first quarter? Will it be back-ended?
Yeah, so actually the last year, the price action was pretty muted for the sector, despite the strong growth, because of concerns around, first, the surrender norms, which were updated by ADI. There was the expectations that margins for the sector and the leading companies would be hit by somewhere around 100 to 200 basis points, which through their product innovation and discussions with the channels, the companies have managed to incrementally bring it down. Secondly, there was a lot of concerns around how the bancassurance sales will pan out. Now, all these life insurers, the larger ones, except for LIC, are bank-led and get a decent portion of their premiums from banca. So with that concern now easing out, we have seen the leading companies come out and suggest that they're looking at, say, 10 to 13%, 14% kind of growth from the banca channel. And when we look at the on ground, we see that even the brokers, the agents, they are pretty positive on growth outlook for the year. So that has translated into good price action for, say, an HDFC Life. If I look at historical valuations, it's still below the mean since its listing. From here, we are looking at, say, somewhere around 15% growth, a slight improvement in margins as the company invests for the future. And with that, we expect a slight improvement in terms of the valuations, somewhere around 2.6 times at this point. which gives a good 10 to 15% upside.
Okay, so still looking at some upsides in these life insurers. Got that. Ragvesh, let's talk about general insurers as well. Tell us, what do you like here? Where could, or which is the company which could see the best growth? And do you prefer overall general insurers or the standalone health insurers? Because I think overall motor third party is a big talking point, the revision in rates. So give us your views.
So the general insurance sector has actually done well in terms of growth, better than life insurance. But if we look at the companies, the listed companies, both ICICI Lombard and Star Health have not done that well in this quarter. In terms of motor third party, my expectation was if there was a price hike to come in, it would have come in already. The news around 18 to 25% revision in rates, that of course supports the companies, but my sense is the players active in the motor space, say ICICI Lombard, they would look at this as an opportunity to grow their book rather than focus on reducing their combined ratio. ICICI Lombard, the multi-line insurer, that we cover and like, over there combined ratio has been in a pretty good sweet spot at 100 to 103%, generating 18% plus ROEs. The concern has been on growth. Last year, the fire business, which is substantially about 20% ROE on a standalone basis, actually declined 5% for the industry, somewhere around 6% for ICICI Lombard. Now that has actually picked up in terms of growth in this year. In the first 2 months, the growth there was 16%. If fire can keep firing, motor third party, if there is a price hike, good. Even otherwise, while the volumes have been low, there has been a ticket size increase. The larger players have been gaining market share, 7 to 8% growth in the motor segment, and continued growth from the health space. That puts in somewhere around 11-12% growth for a company like Lombard, which is good given the ROE profile that it generates. Also, I would like to highlight that the growth that these companies are reporting, they are not like to like. So they are, given the reporting change, say a 9% growth for the industry, which is being reported, should translate to somewhere around 12 to 13%.
So very quickly, apart from HDFC Life, which are the other major insurance stocks that you like?
Right now, the preference is for life insurance over general insurance. Okay. Other than HDFC Life, I like ICICI Prudential, which has disappointed on growth so far, but we believe that growth can pick up, and the disappointment is essentially a base effect. We also like Max Financial, which has given strong shareholder returns, but we believe there's room for much more.
Okay, so going for the life insurers topics at JM Financial over there. Thanks very much, Ragvesh. Good to get that perspective. So we're all prepped up for the Q1 insurance earnings season. Well, with that, getting back to the markets, and it's again a 90-point drop. So yeah, volatile morning and volatile week actually. So far with this kind of a screen, the Nifty is down about 1%. But, perhaps that's what we have. Mid-cap index is down about 0.5% right now.
Absolutely. And I think things are sort of drifting a little bit once again, right? As sort of we said, 25,266. 244, by the way, is the 20-day moving average, which is the days, I think, which is, of course, where the market got to as well. Mitesh is with us with what to do now in terms of specific trades. Mitesh, what do you, what's the view? What are the trades? And how are you looking at the IT space specifically?
Morning, Prashant. IT is something, which is slightly on the negative side in the short term. So, in fact, I have one of the calls on the IT space. My belief is that most of these stocks have entered some kind of negative signals on the hourly, 2-hourly and 3-hourly charts. So, you could see some downward pressure in IT in the coming few days. I have a sell on LTIM with a stop at about 52.60 for targets of 5100, and a sell on KEI Industries, which I would recommend selling with a stop at about 3,700 for targets of 3,550.
Okay, thank you very much, Mitesh, for those trades, and good to get that from you. You know, what we're going to do is take a quick commercial break. On the other side, Manisha is going to be focusing on the commodity space, and she's going to tell us what's top of mind. Stay tuned.
Welcome back. You're with us on Bazaar Morning Call, and the equity market continues to reel under pressure, but we'll now focus on commodities with the birthday girl in the house. Manisha Gupta is here. Manisha, up or down, green or red, doesn't matter. It's all sparkling. We just want to know where's the party. Just tell us where to come.
Oh, yeah. And you know what? Silver is at an all-time high today. So, yes, it is
there's
sparkling,
sparkle.
by
There's
the
always
way.
sparkle on the birthday.
It is. Thank you for that, Surbi. What I'm looking at, though, is copper prices, because we're trading at yet another record highs into this one as well. Well, today actually is a crazy day because Bitcoin is at an all-time high, silver is at an all-time high, copper is also trading at an all-time high. But I'm focusing on copper right now because it depends on tariffs and the way we've seen various statements come in. So, US now has announced 50% tariffs on copper, which is effective 1st of August, and that's taken the prices on the higher side. US did order Section 232 investigation into copper in the month of Feb, and it was understood at that point in time that these investigations would only conclude by the month of November, and if anything that was to come would come in by then. But with the latest statements, you have 50% tariff on copper effective from 1st of August. Now, the National Security Review shows tariffs are needed to protect the US production, is what the US president has said. The US president also says that copper is important because it has higher usage in various sectors like defense and electronics, automobiles, semiconductors, aircraft, ships, data centers, etc. And is the reason the US is looking to promote developing internal markets when it comes to copper in sense of refined numbers there. Now, when you look at the US imports itself, US is dependent on 50% in sense of imports for its requirements. US did buy 810,000 tons of refined copper in 2024, and the major countries which were exporting to US was Chile, Canada, Mexico, Peru, etc. And we've seen some concerns in supply disruptions in many of these as well, is the reason you've seen the copper prices continue to trade higher. But what this has led to is a lot of disparity in the global markets, because when you look at the copper in the international markets, the COMEX market that is, we're trading at an all-time highs. But on LME and Shanghai, you've seen the copper prices decline. The markets do believe that now the kind of inventories that you have in US are higher than the combined inventories in the rest of the world in sense of exchanges there. Also, apart from that, since the deadline is very quickly now on the 1st of August, many of these copper traders are trying to sell their copper to China because they do not think that they can meet the deadlines and be able to ship into US before 1st of August. So you're looking at prices in the rest of the world, barring US, continue to decline. When you also look at the markets, the US is trading on a premium to LME at a record $2,800 a ton as well. So it's a very, very huge disparity in the international markets that we have seen. I want to get a chart on your screens which will tell you on how we've seen the copper prices behave and LME behave as well. So with all-time highs at around 5.6, we've seen copper prices in US gain up by 40%, while LME, which is the major market, has seen prices gain up only by 12%. And the disparity markets believe will only come off after the 1st of August. Until then, the rest of this month could be looking at this arbitrage opportunity.
Okay, Manisha, thank you very much for that. So that's the, a commodities picture. We'll take a quick commercial break here. On the other side, it's our special segment, Indianomics. My colleague Lata discusses the actual tariffs versus the threats from Trump and their likely impact on emerging markets, rates, currencies, with Chetan Iyer of Morgan Stanley, Samir Goel of Deutsche Bank, and Louis Kujis of S&P Global Ratings. Stay tuned.